So big things could happen with the Kyber network / US dollar pair. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go to the cryptos, and the pair we will look at is the Kyber networks / US dollar KNC / USD. Here is the website. So seamless token swaps anywhere. Kyber is a blockchain-based liquidity protocol that aggregates liquidity from a range of reserves, powering instant and secure token exchange in any decentralized application. So this serves, an important need in this whole crypto market. So it brands itself as the liquidity infrastructure for decentralized finance. So it aggregates liquidity from diverse sources into a single pool, which provides the best rates for takers such as dApps, wallets, DEXs, and end users. Yeah, this is definitively very, very interesting and necessary for this whole decentralized finance system to work. Okay, and here you can see some partners. Okay, so let's jump into the charts, and we get the data from Dragon X. So these are weekly data points, and it's still up 1,140% ish within this time frame. So we've had that major crash in the cryptos. We did go down to the green 50-week moving average, and the blue arrows show us that it has worked as a good support level for quite some time, and it is working as one right here and right now. So that is definitely interesting to make note of. Another thing that jumped at me when analyzing this this pair is that it does have that mirror effect, where the move up tends to be mirrored by the move down. So here you see you have this 1 and the 2, and then we form what we could call a head. Then we form a small shoulder, and then a somewhat bigger shoulder. So this one is somewhat analogous to this one to this one, and even when we form the head, you see that we make this key top here and the key top here. Here you almost have a nose. But basically you see that there is this mirror going on. And so that's a very important dynamic to this pair. And when that dynamic has worked in the past, it increases the probability that it will work in the present. So let's just go here to the daily data points where we can get more nuance. Here we have another very key moving average, and that is the red 200-day moving average. Support. Here it becomes surgical resistance, surgical support. We are now trying to turn it into support again. So given that we do have that, tendency for a mirror effect for this pair. So what we do see is that more broadly, we do have this key main shoulder here. We do have that first initial pulse up, and then we form that top. Then that top is mirrored by this one, which is the second here, 1, 2. And the question is this is this thing going to be mirrored here? Okay, so what I have done now is to basically calculate some the duration of the previous patterns. The interesting thing is that when you look at this pattern here, it took 30 days to develop, and that pattern mirrored to an interesting extent this one. It took 30 days to develop. That's very interesting. This pattern here, this one in this blue box, took 30 days to develop. That strongly, very loudly begs the question, this pattern here, will it take 30 days to develop? If we are going to see, that mirror effect, repeat itself, then we would expect, like we had this pattern here, we would expect some continued rally into the coming days in order to, basically do this mirror thing, really. So I think that would be my primary thesis, is that due to how literally 30 days, 30 days, 30 days, potentially 30 days, there is something going on here. There just is. And given that we did see that in the previous, like during this pattern here, we had this very clear mirror effect where you have, one key, one key, one key, one key. Here you form a double bottom. So there is this clear relationship. Here, when we form the left shoulder, 1, 2. Here, you could argue 1, 2. Though this shoulder is more truncated than this one. Notwithstanding, we do see this mirror effect. So yeah, that would be my primary thesis here. There's good reason to expect some continued rally. But then, comes the big question. What is happening here with Kyber network long term? Because, head and shoulders pattern or variations of a head and shoulders pattern, obviously that's not, an inherently bullish technical setup. Hence, even though there is reason to expect some rally to the upside, the big question is what is going to happen when we start approaching, the highs of the previous shoulder. And there's a risk that even, this, because you could argue that there's two shoulders as a part of this, double-headed head and shoulders. There's a risk that there's going to be resistance here when we approach that first shoulder over here. So yeah. You could further argue if I think we have to go here to the 15 minutes. Talking about, head and shoulders, we do have a very interesting inverse head and shoulders pattern here. A left shoulder, we then form a head, then we have a right shoulder, and we are, now rallying and using, the 215 minute moving average here. Because, when, of course, the moving average is a function of the time frame that we use. If you use the daily data points, then it's the 200-day moving average, monthly 200-month moving average, and in this instance, it's the 215-minute moving average. But yeah, those are my takes on this cryptocurrency. Very interesting patterns. But the big question is what is going to happen after the next rally? Because if we do get a breakdown, definitely a good reason to take profits. And if we do deteriorate, so let's say that we do not form anything similar to that mirror effect, that would be a very bad sign. That would be a very bad omen, because given that it has worked in the past, if it doesn't work in the present, in the future, then there's a change, and that would be a change in a decidedly bearish direction. Because if the bears are so ferocious that they will not even allow the bulls to form, a key part of an overall bearish technical pattern, then they have gone ballistic. Maybe we have time for Bitcoin. Bitcoin. You do it like this. So in this instance, we do see the mirror effect as well, and you could make a strong case that we have the very real possibility of forming a shoulder. In this instance, you have a clear but though messy head here. Here is that key shoulder, and yeah, it wouldn't be a big deal from the perspective of the bears if the bulls do form a right shoulder. But the big question is what is going to happen here. This is the key event. When we start to approach, break out above. I think we need to stop the video. Okay, whatever you do, of course, you want to let the trend be your friend, and you can get all the research by just subscribing here.